Volatility is expected from today's anticipated European Central Bank decision. In recent weeks, we've seen a downturn in economic data out of the Eurozone, along with downgrades of growth forecasts in the area. All of this would suggest the central bank would be inclined to be adjusting policy further to the accommodative side, and yet we're not so sure this is the way the market should be positioning into the event risk. If we consider central bank speak in recent weeks, the narrative has deviated from what might expect in the face of the softer run of economic data. Many ECB officials have expressed concern with respect to moving rates lower, as there is a growing sensitivity to downside risks associated with a continued move in this direction. At the same time, U.S. trade policy should not be dismissed when it comes to matters relating to the Eurozone economy. President Trump has been rather vocal about his displeasure with the Euro's run of weakness, and we're not so sure the ECB is going to be wanting to ruffle the U.S. administration's feathers, especially when considering the fact that the euro is already trading down at multi-month lows against the buck. The expectation heading into the decision for the ECB is to cut some growth forecasts while citing a slow, extended rise in inflation. The expectation is also that the central bank will introduce additional stimulus via some form of a cut to the deposit facility rate, with calls mostly ranging from the 10 to 20 basis point range. The question around whether or not the ECB decides to restart its QE program is the stickiest item out there, though given the concerns already mentioned relating to downside risks associated with additional accommodation and political fire the Eurozone economy would likely face from the US in the form of tariffs, we are skeptical the ECB will be looking to make any aggressive moves back into the QE game. But it's worth highlighting there are many who do expect the ECB to resume monthly asset purchases, and if the central bank does go ahead with this, we can expect more downside pressure in the euro to fresh multi-month lows. If, on the other hand, the ECB delivers more in the direction of what we think should be the way it goes, look for the euro to rip higher. Technically, the key levels to watch above and below come in at 110.85 and 109.25 respectively. We also recommend waiting for a daily close above or below these levels for directional confirmation. Below 109.25 will open a drop towards major support in the 108 area, while back above 110.85 could trigger the start to a meaningful, longer-term bullish reversal. That's all for now.